Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond, and we're going to talk a bit about Larry Kudlow, the new economic advisor to President Trump. I've met Larry Kudlow, the very courteous guy you see on TV is, in fact, Larry Kudlow, a gentleman in every sense of the word, an optimist. But one thing Larry is not is a market technician, and he is not a person with whom I would entrust investment decisions because, to be honest, he never saw the financial crisis coming. He was in denial when it hit. And he was talking about green shoots when he had his TV show on CNBC well before the economy had finally bottomed out. Now, why did I start off this commentary praising Larry and then reverting to a smack? The reason is that yesterday, or the night before, I should say, he came out and stated that you should buy the U.S. dollar and sell gold. No place for an economic advisor to make that type of call because I have a position long of the gold miners. And the gold miners go down when the dollar goes up. So frankly, I'm pretty ticked off. But rather than running in and buying more shares on the dip, which would have been inappropriate behavior on my part, much as what I believed Larry's comments were on his part, I decided to display the behavior that I try every day to work on, and that is patience. I say it all the time. I was not born with it. It's practice every single day, and that's what we did yesterday. So what's going on today? Because one comment out of an economic advisor with really only influential authority over the president is not going to last very long. So yesterday, let's pull back on this 4-hour chart. This is the U.S. dollar, the Dixie. And while we should have been breaking down yesterday, Larry salvaged the dollar, and it actually broke out in this 4-hour chart. Now, this morning, we are rolling back over. And when I awoke only an hour or so ago, we had a 90 handle on the U.S. dollar. Talk about the incredible sinking feeling that I had. This morning, we have since given up that 90 handle, and we are coming back down to retest this prior upper band of resistance, which should now act as support. So for those gold bugs out there, remain patient. Let's check out the Japanese yen. It is breaking out, or it has broken out on a 4-hour chart. The euro, it is broken out above the highs of last Wednesday. So we're seeing strength against the two major currencies that the dollar trades against. So as long as these two, the euro and the Japanese yen, move higher, the dollar will proceed lower. Let's take a look at gold. Gold is up now $2.70. Yesterday, we broke down below the lower band of the support level of a 4-hour chart. It's a serious breakdown. Now, we could be coming back right now to do a retest and an attempt to recapture prior support, now resistance. So the jury's out. I'm not making a call one way or the other about whether or not gold is going to be able to recapture prior support today. I think longer term that it shall, especially with the Fed meeting coming up next week. Gold has a tendency to behave poorly prior to a Federal Reserve meeting where it is expected that we are going to get a rate hike in particular. So I know many want me to make a call on which way gold is going to head today. I could sit here and pretend I'm the guru of all gurus. I'm not. The probability is that the trend, which is down, will continue. And until such time that the trend is changed, we have to adopt a cautious approach. We will not add on pullbacks because the prudent behavior to display right now is not add to a position that's not behaving well. It's to reward that position once it begins to start breaking out above resistance levels. It has earned the right to be accumulated. As it stands right now, It's not working despite the fact that gold is up in the pre-market. I've spoken a lot about pre-market activity this week that has subsequently faded, in particular with the S&P 500. Let's go to it. We're up in the pre-market slightly. Each day this week, we've seen rallies fade. If there's only one thing that you could take away from my commentaries this week, is that you should be using the pre-market activity not as an opportunity to go chasing stocks in the pre-market, God forbid, or even at the open. You should be using it as a gauge of accumulation or distribution. If we have strong bright green futures and the market closes at the highs of the day on good volume, well then, that's a healthy market. If you're seeing that market fade at the open after you've had a series of bright green futures that morning, well then the market's sending you a signal that you have institutions that are fading the rally and you do not want to fight these guys. So we have economic data coming out later today, consumer sentiment, market mover, and the home building index, which can be a market mover considering the weakness in the home building numbers of late. Let's get to member stock chart request. The first chart up, weekly chart, Intel. So far this week, we have a bearish key reversal. At current, we are trading down below the key support level at $50.51. So right now, I would not be a buyer of Intel. We have still one trading day left to go in the week. We can recover, closing back above this support level. I would not go shorting Intel. Volume is coming in. It's probably going to come in slightly above average this week. I will caution lower highs on Ultimate Oscillator. Now, we did break out on RSI, so we could be pulling back and doing a retest here on RSI. So if you're holding the shares long, I would, in all probability, the way I would manage the position, I would use a stop into next week, unless, of course, we break down hard this week. I would use a stop into next week on a new weekly low and just get out of the trade. Because if we close out this week below support and we make a new weekly low next week, in all probability, we're going to retrace back down to this lower band of support in the coming weeks. So why warehouse the stock? Especially if you're on margin, why pay interest on that position? Daily chart. So this is a hollow filled candlestick. I warn members about this type of top all the time. You don't want to see a hollow filled candlestick, a black candlestick if you're using stockcharts.com, or a filled candlestick as you see on other charting software, because it's a sign of indecision, like a doji star formation. And rarely does it end well. And sure enough, we had two back-to-back hollow filled candlesticks yesterday. We had a bearish key reversal on the day, and we broke weekly support. Volume was light. U.S. Steel. Well, so much for the tariffs being good for U.S. steel producers, because U.S. Steel never really capitalized on the news. It was announced that we would have steel tariffs, I believe, here the week of February the 26th. All we saw were topping tails. Sellers were moving in and selling any strength. Fast forward to this week, we have broken back down into this trading range. The week isn't over. We can recover. But if we close below this lower band of support here, and especially near the lows of the week, we're coming all the way back down here to this lower band of support. Daily chart. On a daily basis, yesterday we flashed a doji star formation. We might, just might, rally up to 41.50 per share. I think that in all probability will roll back over to retest $37 per share. I would not be a buyer of these shares, and I would not short them. If the dollar pulls back and commodities begin to rally again, we'll revisit U.S. Steel as a long. GRUB weekly chart, an IBD darling. I was bullish on it back here. What a run. It broke out, off to the races. Volume to the upside has been declining week over week. So initially, looking at this weekly chart, while it's a bullish chart, no doubt about it, it's a bit extended, and you're seeing buyers begin to dry up. daily chart. On a daily basis, we are, let's throw some lines up here. Okay. We are seeing a bias to the upside, yet we're not putting in new higher highs. We're seeing some selling at the 112.41 level. Now, we're at an all-time high. There's not much in terms of resistance above here. So if we break out above 112.41, then it's game on. You're going to see new higher highs for GRUB. If we break down below this lower band of support, let's call it 108 per share, and we close down below that level, in all probability, we'll retrace back down to 101 or $95 per share. So while I don't think that the rally longer term is over here, just a bit of a cause for concern. I do believe that strong stocks tend to get stronger. So in all probability, if the market does not break down, you're going to see continued relative strength on GRUB, and we should break out. If we see the markets roll over, then you're going to see pressure on GRUB for no other reason than margin call selling, forced distribution of shares due to we have too many traders out there trading on credit cards, and all stocks will fall victim of forced liquidation if the markets begin to break down in earnest. We're not seeing that yet. We're close, but no cigar. So right now, the path of least resistance for GRUB remains to the upside. And that's it for this morning, folks. I will be working on the week ahead commentary for members. We'll discuss the events that unfolded this past week, how the markets closed out the week, and then we'll talk about our strategy as we proceed into the new week. And it's going to be all the more important because we have a big Federal Reserve meeting next week. So stay tuned. Everybody have a profitable trading day, and I will talk to you over the weekend. Be well.